Good morning. This is Ron Janish. It's Friday, the 18th of October. If you click on, if you go to newlazy.com and you click on our winning project, you'll get the original. You'll get Leo's daily updates. Okay. Now this is interesting. What Leo does is he trades the Forex market using the Royal system. And the royal system, the story goes that there was a bodyguard who worked for the royals, and he found out that the ones who have a lot of money and keep on growing their money, all they really do is switch a big portion of their assets from one currency to another. So if they know the British pound is going to go up a whole bunch, they take the money out of Swiss francs or euros or wherever they have it and put it over into British pound. And then if they know the dollar is going to go up a whole bunch, they switch it from British pound over to dollars. And that's a relatively easy way of making more money as long as you do the right thing. And it's a way of staying very liquid. And also, something else to know, the currency market like this is about $6 trillion a day in transactions. So you have this incredible liquidity. And the bid and ask spreads, as long as you're trading at the right place, is very tight. And there are a few catches. For example, did you know that with Forex trading, if you have an account that does 100% winning trades, every trade is a winner, lots of winning trades, you can still lose money. Yes, you can. And this is because you have something called interest costs. You see, when you buy and sell currencies, you usually do it in what's known as pairs. And so let's say you have a dollar-based account with dollars in it, and let's say you're going to do a GBP EUR spread. So you're long the British pound, and you're short the euro dollar, for example, or the euro, yeah, short the euro, not the euro dollar, short the euro. Then what happens is you have to do some borrowing in there, and you get some interest from one, and you pay interest on the other, and usually the firm you're dealing with really socks it to you on the interest cost. You got to know that ahead of time. So that's something to be aware of. Okay. The And by the way, those firms you deal with, they're often what we in the old days would call bucket shops. So theoretically, they're buying and selling this currency for you at a certain price that's fluctuating all the time. They may be just taking the trade and putting it in what we call a bucket, and knowing that most of the trades that people make are losers anyway, so don't worry about it. So they don't even have any interest costs, even though they pass it on to you as interest cost. Okay, that's just so you know. Anyway, but you're going to see some spectacular results anyhow. And this is no bullshit, no smoke, no mirrors. It's just straightforward stuff here. So anyway, so we have the Royal system, and Leo uses the Royal system. This is Leo's original page, and every day he posts a snapshot of his account. And you can see here, for example, on September 13th, if you add this number here and this number here, and you wind up getting yeah, you just look at this number here, and you see that he's up he's up from $10,000, he's at 11,855, and that's in a period of less than 3 months. Okay, so he's up about 18% because he started this way back when at about $10,000, saying about 10 grand, right? So he's up quite a bit, and now so we know that Leo's royal system has some validity, and it's kind of interesting and useful. But Leo's royal system has a few problems with it. One of the things is it doesn't give any kind of weighting as to when to load up on a whole bunch or stuff like that. So, what it looks for is it looks for three or more to be in the same direction. Let's see an example of that. Let's go back to way back when. July 2nd was a good day. Let's see, here we go. And we can see here that we have 4 positions on. See how you have negative 10,000, negative, 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 right? And they all have GPY, JPY on the right-hand side. Okay? And so that means short a lot of Japanese yen and long these other guys. Okay? And so if you look and you see, you go further in time, so we start July 2nd, and we see as we get up to, oh, I don't know, here's a good point as any. July 17th, we can see that those negative JPY positions are very profitable. See here? They're pretty profitable. So here's one that's a small loser. Okay. And he's also got some other positions on there, but they're just kind of in there for placeholders, okay, for the time being. And then he moves on, so he gets out of those. Actually, he goes on vacation for a while, goes surfing in Hawaii, and then he comes back, and in August, where is it? Where's that wonderful August example? Anyway, what he does is he winds up going long. Does he go long? Let's take a look. Where is there a good position? AUD, AUD. Yeah. Here we go. Here we go. See, here you have AUD JPY is negative. So technically you can flip that around. You can say JPY AUD is positive, and you say GBP AUD is positive, and EUR AUD is positive, and so you got 3 positives effectively with AUD on the right-hand side. So that would say, hey, AUD is the one to watch, and the one that's likely going to be very profitable. So that's what Leo does, and when he gets 3, he just puts all these different trades in there, and when he has 3 or more in the same direction, then you have an alert of saying, hey, this one's likely to do rather well. And sometimes you'll get 4 in the same direction. Okay, so that's all there is to it. Okay, now that's what Leo does. Now Lenny takes it up to the next level, and what he does is he'll select which ones. Let's find Lenny. Let's look at Lenny, version 2.0. Okay, so you have Lenny here, and Lenny takes Leo's positions, and he figures out how much to do, whether he's going to do 10,000 or 20,000. Okay, you can see here is 10, 20, and so he might be going up to 30 at one point. Okay, so, or even more later. And so a good question now is, why the heck is this being done? Real simple. What we're out to do is to demonstrate that it is possible to take a group of fiat currencies, this paper stuff we call money, and switch from one to the other, and do that in a manner that's profitable, not to get your money so that you open an account with us, because you can't do that because we don't have the capability for that, but in order to make that as part of a stable coin. Stable coin is a cryptocurrency, which is the currency of the future, that will have a constant $1 value or €1 value or whatever, whatever. Okay, so if you constantly have that, in order to have that, there is one out there called Tether. And by the way, their reserves, which used to be about 100%, are now in the below 80, probably closer to 70 or 60% of the total thing out there. So That's kind of risky. What we're looking at doing is having a cryptocurrency that has over 100% in reserves constantly. This is not easy because remember that at any given time, a cryptocurrency will have costs to operate. And so we're looking to minimize those costs and maybe even pay the holders of the cryptocurrency a dividend. And this is how it would be done. Okay. So if you know somebody that's in the cryptocurrency business that might find this useful, let them know about it. All right. Hey, thanks for your time. Bye.